Welcome to Morris Money, where we talk about some of the most interesting small cap stocks in under 5 minutes. I'm your host, Morris Money. Today, I'm talking about what happened to ILUS. This is a follow-up video to a video I made a couple weeks ago discussing how they were postponing their shareholder meeting. But furthermore, within that letter, they talked about how that they were going to update us within that next week or so. Back from that shareholder update, they said, further with all developments taking place in ILUS QIND and ERT, now SAML, both this week and next week, a shareholder update will be provided by the 26th of January 2024. Now, as all of you know, it's about a little over a week now as of recording since January 26th. And a shareholder update did come out, but it came out after that deadline, which was disappointing to see from ILUS, seeing that they didn't meet the deadline, but they gave us somewhat of an update on January 29th. Do you want to be featured on Morris Money? Be sure to subscribe or leave a comment down below and you could be featured on the Morris Money ticker. Now, back to the video. Within this letter, they talked about discussions with a NASDAQ-listed company, which has been in discussion for over a year now, maybe even 2 years. I know for a long majority of the time I've been covering ILUS, they've been talking about uplisting to the NASDAQ or acquiring a NASDAQ company so that they could uplist. They also discussed some of the legal work being done with SAML and the legal work that they're doing right now to transform that into ERT. Another thing mentioned within the shareholder update was that they're in the process of completing an S1 for QIND to help raise capital, which could be a good or a bad thing, but I'd say possibly bad, as it would probably mean diluting shareholders. But to that note, in the bottom of the shareholder letter, it says, we believe that the 75 million shares added to the outstanding shares last week, referring to ILUS, was a conversion done by AJB Capital from a previous convertible note. We know that this is disappointing for shareholders as it is for us, and we are working hard through our subsidiary structure and the targeted NASDAQ deal to pay down debt, reach more suitable agreements with lenders, and place ILUS in a clean position going forward, with our operating subsidiaries being able to raise their own capital. Now, this would be fine and great, but in preparation for this video, I was going through ILUS's data room again, and February 1st, they released another shareholder letter, but this one talking about a conversion of stock. I'll read off the letter right now. We are writing to notify you that there has been a 50 million share conversion in return for a $600,000 investment into ILUS. As much as this is disappointing for shareholders, and it is something we certainly prefer to avoid, it is a necessary evil as we require this investment to complete an important deal which is pending. We are expecting to announce a major step forward for our group, and we believe that this event will be the first in a series of events which add the first major tranche of shareholder value that we are working towards since our first shareholder meeting in January 2022. This investment allows us to realize the much needed capital required to get over the final speed bumps and execute this transaction swiftly. While we understand it is disappointing for shareholders, we are confident that the lasting value delivered almost immediately supersedes the short-term disappointment of this conversion. The current progress being made allows us to achieve our goals sooner and more efficiently while avoiding a reverse split. Traditionally, the seller, while very active, has never been known to aggressively sell ILUS stock. With the shortage of other options available, we believe we have moved forward with the best available opportunity, especially given the obstacles and significance of the deal we have on the table. We ask your patience and support as we enter the home straight and assure you that your best interests are always our top priority. So, to any rational shareholder, within the past 2 weeks, we've seen a dilution of 125 million shares, or 125 million shares being brought into ILUS. Definitely disappointing news and not what you want to see. But as I've told people before, all you can do as a shareholder at this point is hold. Now, some people got in when it was below a penny, and actually that's when I should have bought in a lot more. But as of right now, a lot of people just have to stick it out and hope that this is for the best. I want to know your thoughts on this down below. Do you think that ILUS is actually going to get anything done? Because people have mentioned before how ILUS does talk a lot, but we haven't seen too much value added to shareholders. If anything, it's a lot of dilution with the hopes of something major happening. And something I pointed out earlier in the video, the company said that they would update shareholders by the 26th of January, and we didn't even get an update until 3 days after that. Something that could be easily overlooked, but something to keep in mind. Morris Money is preparing for its next destination, 1,000 subscribers. Make sure you're here for the ride by subscribing to Morris Money. Looking now at the broader markets, the iShares Russell 2000 ETF so far year to date has returned a negative 3.42% for investors, and on the 1-year outlook, it's about flat at time of recording, negative 0.75%. Now, Chinese small cap stocks aren't doing that good. Chinese stocks suffered another rut on Monday, with a good majority of them slumping nearly 9% at lows, as former U.S. President Donald Trump threatened a renewed trade war if he were to win the election in November. China, the 1000 index CN 512-100, a gauge of small cap stocks, finished down 6.2%. Although the index finished off its lows of the session, it still marked the lowest point for the index since mid-2019 according to FactSet data. The index has fallen nearly 27% year to date according again to FactSet data. The rebound occurred after local authorities pledged more efforts to support the country's struggling stock market, including taking steps to mitigate risks stemming from shares pledged as collateral by China's mom-and-pop traders, according to a Bloomberg News report. The country's stocks are entering their 4th straight year of losses, according to the performance of the iShares China Large Cap ETF, FXI. The ETF, which trades during U.S. market hours, is down nearly 11% so far this year through Friday's close. Definitely not some news you want to hear coming out of China or for the markets in general, but let me know your thoughts about it down below. And let me know, do you like this new style of format where I also talk about some of the broader news after the main topic of the video? Let me know your thoughts down below, and thank you for watching Morris Money.